Hello, everybody. Thank you very much for joining us today for our next episode, Learning from Experts. Today, I'm Yevgen Pitelman, Coldwell Banker real estate agent, and today, my special guest, Sal Tomaselli, our preferred mortgage broker. Hi, Sal. Good morning. How are
Hello,
you?
Eugene. Good morning. Good morning.
Thank you for joining us today.
My pleasure. Thank you for having me on.
Absolutely, absolutely. Today, I would like to talk to Sal about what's happened after the recent inflation criteria came out, and which in turn made the interest rate went up over 7%. Last time we spoke a little bit about that. We touched on the market, real estate market and mortgage market, but now it's been already 10 days since then. And a lot of people really like to know how is it going right now and what to expect in the future. Sal, could you please give us a little bit more about that?
Absolutely, my pleasure. So for those of you that don't know me, my name's Salvatore Tomaselli. I'm the owner of Professional Mortgage Solutions. I've been in the business over 30 years. And so what's happening in the market today? This is right now the interest rate market had a slight uptick. It had an uptick due to inflation numbers. There was an expected inflation rate of 2.9%, and it came in at 3.1%. So it was a very slight differential, but it did cause the interest rates to bump up slightly. One of the services that we provide to our clients and referral partners is our weekly mortgage market update. So if you're in the market to purchase a home, or refinance a home, or if you're just interested in where the interest rates are going, I could show you our service that we offer to clients. Just to put this out, and so essentially, this is what our market update looks like. Today's February 21st, 2024. And we give you an overview of where the national average is for interest rates. Right now, on a 30-year fixed, which is the most popular program, we're about 7.11%. So we did push over 7% this week due to, call it, some negative news in the marketplace because inflation has risen. And on the next page, we always give you kind of an indicator. So in the last 2 days, the inflation numbers came out about 3 days ago, 4 days ago. And since that time, the rates have ticked down a little bit. And so this is very, very common. This is nothing to get alarmed about. This is just a normal movement in the marketplace. Typically it doesn't go straight down. It goes down in increments. And, I'll just share another one of our sources. This is where interest rates have gone. And you see right here in November of 2023, they
Yeah.
peaked. The interest rates peaked. And this is when we were right around 8%, 7.75, 7.875. And if you look, we have started to trend down again. But again, it's not a straight line. And so this is a very normal occurrence where interest rates will come up a little bit, very slightly. But if you look at the overall, this is, from March
The
of
big picture.
2020. I'm sorry?
The big picture.
The big picture, yeah, and the rates have come down. So that's really where we stand at this point. Rates are in a downward trajectory.
Mhm.
However, they're from a week-to-week basis, based on economic news, they're a slight uptick. So I think the overall takeaway would be that interest rates are on a downward trend. A lot of times we advise clients, client has the ability to lock in their interest rate at any point. When we see markets like this, we typically advise clients to wait to lock in their interest rate because more than likely the interest rate will continue to drop. and we're in that type of market. We're on a downward slope. So I hope that answers your question. Do you have any questions for me, Eugene? Is there anything else you'd like to?
Yes, I do have one question. It's just come to mind that I recently spoke with one of my clients over the phone, and she mentioned that, you know what, she's about to sell her property, and she mentioned that, you know what, I would really like to have a buyer who's a cash buyer. And I asked her why, besides many other reasons, what's important for you in having that? And then she said, you know what, with all these interest rates up and down, up and down, up and down, I'm afraid that I'm going to get a buyer who's supposed to be who's pre-approved for the certain number of mortgage, and then while we're in the process of he's in the process of getting that mortgage, he might be priced out and will not be able to afford that. I understand from your point of view, you always say, hey, this is a normal up and down, this is slight change and everything, but what would you say to this? What's your opinion on it?
I think we're in a very different market at this point. So what we experienced about 2-3 years ago, we were in somewhat of a 100% seller's market. That has we've kind of come to the middle a little bit. So we're not in. Last week we did a video together, and you indicated that the inventory is still low, and which gives the sellers a little bit of an edge and an advantage. However, I wouldn't base a decision just strictly on whether a person is paying cash or getting mortgage financing. If you come to a company like mine, I'm going to vet that client. I'm going to make sure that they can get this mortgage. And then, if it's really tight with regard to interest rates and qualifying, generally at that point, I would suggest locking in, just so that they can guarantee their interest rate. What I would focus on as a seller would be to achieve the highest possible price, irrespective of whether there's a cash buyer or not. Now, if a cash buyer is offering $20,000 less, would I take that to I would probably take the client that's putting down 3.5%. It doesn't have to put a lot of money into the deal, but if they're qualified, they're qualified. So one of the services that we do as a mortgage company, if you have a buyer and you're working with the seller, we would be more than happy to review. The buyer can go anywhere for their mortgage, but we would be happy to review their income and see if they are a viable candidate for this property, for the amount of mortgage they're applying for. So not only do I work with buyers, but we also work with sellers that want to verify the clients that are coming to buy the properties, and they get an independent verification. So that's another service that we could offer to your sellers.
To make sure that the deal is going to get
yeah, if it makes sense. Sometimes usually most people in the mortgage industry are not going to waste time and issue pre-approval letters to unqualified individuals. In my company, we immediately review their credit. We review income, their assets, and their job history. And we also make recommendations. So if a client comes to us early on for a pre-approval, there might be very small adjustments that they have to make in order to really make their file very strong. And we give that advice to them early on in the process. So, if you're dealing with a buyer, it's really prudent for that buyer to sit down with a mortgage professional, go over the numbers. We see these scenarios every day. And so the buyer, the average buyer buys one house every 7 years, I think the number is. So,
Right.
we see it, 200 times a month, 300 times a month. So we can advise buyers
Mhm.
as to what what are best practices to ensure that they're going to get the mortgage. And
I
it's
got you.
very much on an individual basis. Hopefully
Okay.
that answers your question.
Right. Well, so basically, overall, you do have tools to make this environment of pre-approval and getting all the way to the closing table is much more safer.
Yeah,
So
my reputation is on the line,
yeah,
Eugene. So it's really critical, because if I give you, you're a realtor, and maybe I see 4, 5, 6, 7, 10 deals a year from you. Well, if I give you bad information on one, you're not going to call me in the future. So it's, even though my client is the buyer, and is the
you're right.
borrower, I still have to provide very, clear cut information as to whether they're approvable or not. It really serves no purpose for me to say this person can get an $800,000 mortgage, and then in fact they only qualify for a $600,000 mortgage, and it wastes your time, it wastes my time, it wastes the borrower's
Absolutely.
time and the
Of
seller's.
course.
So it's
Yeah.
really critical that we give the right advice, and that's what we do as a company.
Right.
And because we don't want to waste anyone's time or money, we want to make sure that the transaction goes through. So
Okay, I got you. Thank you very much, Sal. This was really helpful. This is extremely helpful.
you're
Okay, I
welcome.
guess this thanks. I guess this is all for today. Everybody, thank you very much for joining us. Please subscribe to our channel, so this way you're not gonna lose any new episodes. And my contact information as a real estate agent, Sal's contact information as a mortgage broker, all attached to this email, to this video, sorry. And please feel free to call us with any questions you might have. The only purpose for us to provide you this information so you can make informed decision, whether it's a real estate market or mortgage. Thank you again for coming. Bye, Sal.
Thanks, Eugene. Goodbye, everybody. Have a great
Bye
day.
bye.
Take care. Bye bye.